Hello everyone, and welcome to this presentation of how to increase your trading odds in every market. Welcome, my name is Primo, the president and founder of Specialist Trading, and in today's presentation I'm going to start off by showing you techniques that are used by a good many traders that really decrease your odds for trading success, and then I'm going to share with you two techniques that make up one of our most consistent strategies that I'll share with you and show you exactly how you can use them to increase your trading odds in every market. As I stated, I'm the president and founder of Specialist Trading, and we are first and foremost an educational company. As you'll see today, I put a great amount of detail and attention to instructing all of my members as students as well as the attendees in all of my presentations. So I want to leave you, even if you decide not to become a member of Specialist Trading, I always like to leave you with some information, some trading tips and methods and techniques that I've accumulated in my 37 years of trading that you can use in your own trading as early as tomorrow. Now, before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these specific techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to invite each and every one of you, if you haven't joined yet or followed us, to join us on Twitter. This is our handle right here, at SPCLSTTRADG. We give a lot of great free information. We tell you about current signals that we may be in or current strategies that were, furnished us with some great information about the markets. We cover not only stock market and individual stocks, but the E-mini and futures markets as well as Forex. So there's a lot of great free information. And once again, I invite you to follow us on Twitter at SPCLSTTRDG. Okay. Now, as I said in the very opening segment here, that we are first and foremost an educational company. I know a lot of people love to get involved with different educators and say, well, what are the signals they produce? What are they telling me what to do? It's in my opinion, and with all the other traders at Specialist Trading, that this is what really decreases your chances for success when you rely on outside sources, when you come just to rely on what their signals are, what they're doing. Because I've been trading long enough to know that it's really about becoming a part of the process. Two people can trade the same signal, and I can almost guarantee they won't come up with the same results. Oftentimes, you'll see one come out a winner and the other one will be a loser. So the point is, we want to provide you with all the tools and tips that you need, as well as signals and strategies, but we want you to become a part of the process so that you can ultimately rely on your own decision-making in order to trade. So this is the same edge that was taught to me when I was trading on the floor. This is what got my trading to turn around, and this is the way I teach all of my students and members. Remember, we provide you with strategies. We provide all of our members with signals on a nightly basis when they do occur, but it's not about having you just blindly take them. We give them basically for educational purposes so that you can spot them and you know how to spot them in the future, and then ultimately and eventually you'll be able to spot them on your own. So they're really more learning guides and learning tools as opposed to signals that we want you to just blindly take. Once again, my goal is to teach you how to trade with the specialist edge, which is really rooted in simplicity. Now, here's what you're going to learn today. I'm going to share with you two conventional methods that I would say the majority of traders use, but you'll see how there really is no consistency when you start to apply these methods overall. But then I'll share with you two rules that make up strategy number 4. Now, these are great rules that you can start using on your own. You can apply them to your own strategy, and I'll show you how they make up, I would say about half of the rules to strategy number 4, one of our most consistent strategies. But then we'll take it even a step higher. I'll show you if we add a very powerful tool, a short-term trend identifier, how we can really increase our odds for success. We're going to show you great ways in which to increase your trading odds today in virtually any market, any time frame, in any direction. Now, one thing before we begin, I just want to state that I know a lot of people always have questions. If you're new to my presentations, you know that I like to take my questions at the very end of today's class. So if you happen to have a question, if you would kindly just remember it or write it down, I promise I'll get to it at the very end of today's class, okay? There's a certain box that I have to open up to even see questions, and I won't even be opening it up until the very end of the class. I won't see any questions you post until the very end, okay? All right, let's begin. Let's start out with a trading method that many people use and that they think they're doing well, but there really is no consistency to it. And those are double bottoms and tops. A very common way of trading. I know personally I've traded them before. Let me show you, for those people who aren't familiar with what they are. We're going to look at an older chart of Apple. And as we see here, we have this blue horizontal line across the very bottom here. We came down, we touched that line, all right, that's first bottom. We kind of rallied and bounced off that and touched that again. So conventional wisdom tells us usually when you have a double bottom, when price has come down to some certain level and tested it more than once, usually at least twice, usually what will happen is that turns into some type of a floor, some type of a base. And prices most likely will rally. Okay, this is what conventional wisdom tells us. Now it works the same way, the opposite way, if we turn it upside down. If we look at an older chart of the E-mini here, when price rises and hits a top for one period of time, sells off, and then hits that top again. Conventional wisdom tells us that we've created some type of a ceiling, some type of resistance, and most likely we're not going to be able to go through that if we couldn't have for the first two times, and so prices usually go lower. This is what we've all read in the books. We've gone to presentations before. Educators have told us this. It's a very common term, double bottoms and double tops. The only trouble is, here's what happens most of the time. You'll see it, you'll say, boy, I studied, I learned the book, or I took the course. Here's a perfect double bottom in TGT, so you know what? I'm going to buy it. This is exactly the way I was taught, and look what happens. It doesn't work at all, right? How about this example? What about trading method number 2? Another very popular method. I would say the majority of Forex traders use this method in their trading. A lot of stock traders do as well. And these are Fibonacci retracements. These are basically, you're looking for some type of a trend, and then you're looking for a pullback or some retracement within that trend. There's nothing wrong with that. In fact, we subscribe to that philosophy. We use that in a number of our strategies, but we don't rely on Fibonacci. Let me show you a very extremely simple example. We look at an older chart of UPS. We see that we're in an uptrend. Okay, we kind of bottomed here and then started to bounce. Now, what you'll look for is, once you've decided that you are in an uptrend, you'll look for this type of brackets here. This is where the bottom was, and here's where the top was. You want this to come back, let's say 50%. It's a very simple, standard way of measuring Fibonacci. It's just 50% of the move. So when we get to this half level here, when price retraces half of the distance of the rally, that's where you should step up and buy. So we place our order once we see that price has come down. We place our order, and guess what? It works like magic, okay? It's a great, great technique when it works like this. Same thing works to the downside. We've had a downtrend in the euro-yen, okay? If we take the top and the bottom brackets here, we see we kind of topped out on the short term here. We bottomed out. So we're saying that once we retrace or bounce back up 50% of this bracket here, this is where we should sell. This is a great spot to go short because most likely we've been taught, and conventional wisdom tells us, that the trend will resume lower. So we wanted to get at least up to this 50% level. That's where you place your order to sell. Guess what? It worked like magic, right? So we've taken the courses once again. We've read the book. And so we try it. We see this older chart of Tiffany. It's obviously in a downtrend. It's going to bounce up to the 50% level, or so we hope it will, and that's where we want to go short. So once we see it gets there, we place an order to go short roughly around 84.5, 85. And we're excited. It's worked so many times on paper. We've seen it work in the courses. We go short, and look what happens. It goes straight up. See, these techniques work fine when they stop working, just like a number of other techniques I've shared with you in past webinars. And what we're looking for is consistency. Unfortunately, there is no consistency in these methods. So we need something that is a little bit more cut and dry, a little bit more simple so that we can rely on it and so that we feel confident taking these trades. So let's talk about strategy number 4, probably one of our most consistent strategies at Specialist Trading. Our most popular strategy by date is traded in over 60 countries across the world, from hedge fund managers to people who have been trading for just a couple of weeks experience. Let's share with you some of the highlights of this. As I just stated, it's for virtually all traders. It doesn't matter if you just started trading last week or you've been trading for 30 years. Same rules apply to everyone in its most standard format. It's for traders looking to catch quick momentum moves. Okay, this is the consistency we found in this. So you're not in the trade a long time. Now, we have ways in the course to teach you how to hold on to those trades if you feel it's going to continue with the large trend. But if you're looking to take a quick 1 to 3 day trade, if you're trading daily bars, this is a great strategy. Now, its intensity level from 1 to 3, if 1 were the most intense, where you had to literally be in front of your chart 24/7, and 3 were the least intense, where you could just enter an order and walk away, it's right in the middle. It's a level 2. Now, it only uses one indicator. That's it. That's the only thing we're looking at in terms of indicators. We're not, having to see all these crazy lines cross. We don't care about what's going on with volume or what's going on in the news. It's mainly a pattern recognition strategy. As I stated, it's tremendously popular. Why? Because it works in any time frame, in any direction, and in any market. I'm going to show you a lot of examples in just a few minutes. But please remember, our edge here is consistency. I'm going to show you some real-world examples, but I'm going to show you some really nice, for educational purposes examples. But please remember, it does not work 100% of the time. It has tremendous consistency, but we're looking for strategies that have this 2-step forward, 1-step back approach. Anyone can proclaim that their strategy or system makes 2,000% a month. That's great. We're just saying that since this is a strategy that allows you to become part of the process, that isn't a system that we don't, make sure you trade it the same exact way every time, it has a basic level of consistency that we really feel will make you confident to trade. All right, so here are the rules. You may want to write this down, but don't worry, this presentation is being recorded. That's probably our most common question asked. So if you have to leave early, we just started about 10 minutes ago, this is being recorded. Just kindly contact our offices or send us an email. We'll send you the link to the recording. Let's say you want to go long. Okay, these are the rules for going long. We're only going to give you the 2 rules. I can't give you everything because it wouldn't be fair to all the people that have purchased strategy number 4 already for thousands of dollars. But we'll give you 2 of the basic rules, and these are probably some of the most important rules of the strategy. First of all, if we're going to be going long, price must be above the 50-period simple moving average. And when we say must be above, the ideal situation would see the majority of bars above and closing above the 50-period simple moving average. But as long as you enter, as long as the close is above the 50, that's okay. It's still a valid signal. Now, what we want to see is we want to look for a bar that closes in the top 25% of its range. Okay? Why do we look for a bar that closes in the top 25? Because the market is giving you a clue that because it closed in the top portion of its range, it's most likely going to continue. See, this is the consistency we're looking for. We don't have to guess, hope, and pray that a stock or the future is going to stop at the 50% retracement and keep our fingers crossed and go, boy, I hope it stops here. Or we don't have to hope and pray that we're going to hold that double bottom or that double top. This is the most powerful tool you can have, the market telling you and giving you a clue what it wants to do. So it's giving you a clue that most likely if it closed in the top portion of its range, it's most likely going to continue in the next couple of bars. Okay? So this is what we're looking for. So first example right here. This is a generic example just for, once again, for educational purposes, but we're sharing this with you just so you can understand the whole concept altogether. The overall trend is up. Why? Because where is price? Price is above the 50-period simple moving average. So if the overall trend is up, this means we're only going to look to go long. Now, I'll show you some examples later on where price seems to zigzag above and below the 50. That's for more advanced traders, which we go over in the course. But once again, I'm showing you ideal situations right here. And this is what you're initially looking for. All the closes, no matter if they're up or down, to be above the 50-period simple moving average. This tells you the overall trend is up. And if the overall trend is up, this means we're only looking to go long. All right? Now, what's the bar we're looking for? We are looking for a bar that closes in the top 25% of its range. All right, so in other words, if we take this bar, for example, it doesn't matter. This is where people get confused. They think, well, Steve, how does this work with candlesticks as opposed to standard open, high, lows, close bars? There is no difference because all we're looking for is the extreme high of the range, which would be right here. If you were looking at candlesticks, that would be the top of the wick. And the extreme low of the range, that would be the bottom of the wick. Now, if we were looking at standard bars, it would just be the range high and the range low for that day. So what you want to do is take the high and low and just subtract it into 4 equal parts, okay? The top 25% is where you want to close. So as you can see here, we closed in the top 25% right there. So these 2 bars in green closed in the top 25%. Now, as you can see, after each bar, we had a rise in price. This is the beauty of this consistency we're looking for. Now remember, these are not actual signals with strategy number 4, but these are two of the most powerful components that make up the requirements for that particular strategy. All right, let's say we want to go short. Well, we just reverse the rules upside down. Now price must be below the 50. If you see price below the 50, you're only going to be looking to go short. We will in no instance, in no cases available, look to go long. We're not going to try and pick bottoms. We're only looking to go short if price is below. We're only looking to go long if price is above. But let's say price closes below the 50 periods of moving average. Now we're looking for a bar that closes in the bottom 25%. Why? Because now it's telling us the market itself, not an outside source, not some TV guru or some guy giving a webinar or some system telling you, but the market, the actual bar is telling you most likely it's going to continue for the next 3 to 5 bars lower. So that's a great clue. It's free. There's nothing you have to pay for. There's no signal service. It's right there in front of you in any time frame. So if we look at these examples right here, once again, we are below the 50 period simple moving average. So we are in no way going to try and buy anything. We're only looking to go short. Why? Because the overall trend is down. Secondly, we're looking for a bar that closes in the bottom 25% of its range. So we take this bar here. Remember, we're only looking for the very top, the high of the day, and the low of the day. And we closed in the bottom quarter, the bottom 25%. So this meets all the qualifications, and look what happens. See how the market was telling you in advance that most likely we're going lower. All right, so let's look at some strategy number 4 example. Remember, this is extremely consistent strategy, but I only gave you 2 of the rules because I can't give you everything. It wouldn't be fair. But once you become a member, we tell you all where to get in. We have different methods for entry. We have different stop placements. We have different exit points as well. But let me just show you with these 2 components that you've already learned right now how you could apply them to any strategy you currently have. Let's say you don't want to become a member of Specialist Trading. Well, that's okay. You can use what I just shared with you on your current strategy. All right? Or you can devise a strategy based off these extremely important tools I just shared. But let's go over some strategy number 4 examples. All right, here's the chart of Apple. As we see here, looking back at the end of April, beginning of May, we crossed above the 50, so this means we're only looking to go long. Now, the strategy add-on, which we provide for all of our members, generates buy and sell arrows, telling you when to get in. But after a while, after some practice, you won't need those arrows. You'll know when the signals are generated or not. But strategy number 4 generated 2 buy signals on the 9th and on the 16th of May. And as you can see here, look what happened right after that. They were giving you clues as to which direction. Now, obviously, we see other bars that closed in the top 25%, such as this bar and this bar, but they didn't meet all of the other rules of the strategy. Therefore, there was no signal generated. But these 2 did. So these are valid signals. How about ABX? Well, on the 10th of April, we see here we were well below the 50-period simple moving average. Now, someone could say, well, we're starting to rally. I'm going to buy this because it looks like we've bottomed out. If price is below the 50 period, we're not even going to consider buying. We're only looking to go short. Now on the 10th, ABX generated a sell signal. It closed below the 50, and we closed in the bottom 25% of this particular bar. Remember, other bars closed in the bottom 25%, but they didn't meet all the rules. So as you can see, look what happened. The stock fell out of bed and generated 2 more sell signals on the 14th and 22nd of May. How about SNDK? Well, this was on the 10th. This was just a couple of weeks ago, 2 weeks ago Tuesday. As we see here, we're kind of going sideways to lower, but we ask ourselves, where is price in relation to the 50 period? Price is above. We closed in the top 25%, and all the other rules of the strategy, only about 2 or 3 more, were met. So this is a long signal, and look what happened. We went up right after that on the very next day. How about IWM? Okay, it works great on ETFs. This is an ETF of the Russell 2000 market. Okay, so it tells us basically what the index is going to be doing in the Russell. So coming into this, we see here, coming into May and June, we were below the 50-period simple moving average. But the first week of June, we crossed above it. So once we were below the 50, we could only go short. So we provided our members with 3 great signals to go short. But once we crossed over, we are no longer looking for shorts, looking for longs. And on the 16th, which was just roughly a little over a week ago, we had a great buy signal to go long. How about the E-mini? Well, here's a daily chart of the E-mini. Obviously, you can see that we are above the 50 period going all the way back to the end of April, beginning of May. So we're looking for bars that close in the top 25% as they did here, and the automatic add-on automatically generated buy signals for us, as well as one on the 13th. Okay, I'm going to give you a little clue now. This is going back up until just about the 22nd or 23rd of June of this month, which was just Monday or so. I'd like you to look and see where the E-mini, or for the market for that matter, closed today. Is it above its 50-period moving average? And did it close in the top 25%? The market may be giving you a clue as to what it wants to do in the next 3 to 5 days. All right, just a little clue just to look at the market indexes today to see how they closed and where they closed, either above or below the 50, and did they close in their top or bottom 25%. How about intraday? I know a lot of people say, well, Steve, I don't trade daily bars, I trade intraday. Well, here's an hourly chart of the E-mini going back, as you see, here's the 18th. So this was just last week, last Wednesday, all the way up to the 20th, which was Friday. Now, we were above the 50, even though we kind of oscillated above and below, the majority of prices closed above. Now, on the 18th, we generated a signal to go long using strategy number 4, and on the 19th, the very next day, we generated a signal to go long. So each signal was profitable. This is on an hourly chart. Let's say you don't trade hourly charts. Let's say you trade much smaller time frame. Well, here's a 5-minute chart going back to the 24th, which was Tuesday of this week. The market had a sell-off at the end of the day. We were below the 50-period simple moving average. As you can see here, we ended the day. Here's the 25th, the opening of the next day. So we're below the 50. So for the last couple of hours of the trading day, Pacific time, we are not looking to buy. We're not looking to pick a bottom. We're only looking to go short on a 5-minute time frame. So now we look for bars that closed in the bottom 25% of their range. And do you think strategy number 4 had some consistency on that day? Remember, this was only on the 24th on a 5-minute chart. It's just 2 days ago. These are all the signals you could have taken with the strategy number 4 course. How about a Forex member? Okay, well, say you trade the Forex and you like to trade the long-term Forex. Well, here's a weekly chart of the British pound. Okay, obviously, we're above the 50-period simple moving average, so this means we're only looking for buy signals. We've been giving buy signals since November of 2013. Okay, now I know it doesn't seem like a lot, but these are thousands of thousands, upwards of $10,000 in profits if you just traded one contract trading these signals. Okay, these are hypothetical situations, but had you taken the buy signals, you would have done very well. And then you can use these on daily charts as well. There's a current chart of the Canadian dollar. We are below the 50 period. As I stated, sometimes you'll see it oscillate above and below, but that's okay. The majority of bars are below. On the 22nd of May, we had a sell signal that generated some nice gains. Another bounce, but then we generated a sell signal. Let's see, here's where people have trouble. They'll say, well, we're bouncing. Most likely we're going to continue to go higher. That's not what we look at. We don't, guess or use discretion in terms of wishing and hoping or what someone says on TV to make our decisions for us. We only listen to the market. At this point, the market in the Canadian dollar closed in the bottom 25% and it closed below the 50. So that's a valid sell signal if all the other requirements were met. And you can see they were. And then another one was generated last Wednesday as well to go short. Here's the daily chart of the euro-yen, a signal that was generated for all of our Forex strategy number 4 course members on the 9th, which was just a couple of weeks ago. We're below the 50. We close in the bottom 25%, and then we go straight down. We made roughly, each contract would have made over $1,000 in just about 3 days. Now, I want to share something with you because I know a lot of people will say, well, does everything work? Are they 100% correct? I thought you said that sometimes it doesn't. It doesn't. Nothing works 100% of the time. And I want to share with you some examples just to show you that we're not cherry picking and showing you the best. Here's an older chart of SNDK. And here was a chart that was generated, or a signal that was generated to go long. Okay? We were above the 50. We closed in the top 25%, and all the other rules were met. So this is a great signal to go long SNDK. So you're all excited, you jump in, and look what happens. At this point, you're probably throwing your computer out the window. You say, this guy Primo is just like everybody else. Nothing works. It's not, it's just a scam. It doesn't work for me. So you sit there and you watch it, but you don't trade it. Now, about 2 weeks later, you're still looking at SNDK, and another signal is generated right here. Now, even though we were below the 50, price bounced back up, and we closed above the 50. So the automatic add-on generator signals another buy signal. But you've been burned. You lost a lot of money on this one, and you said, you know what, I'm not going to take this signal. It probably doesn't work. And then that's the one that goes straight up. You could have made everything you lost and plus a little more probably on this trade. So you have to sit there and ask yourself, if nothing is 100% consistent, is there any way that we can increase our odds for success? How can we increase our odds for success even more? Well, there is something that we have at Specialist Trading. It's a great tool, a tool that I was taught how to use on the floor of the exchange that until recently in the last year we've automated, and this is the PET-D, or it's simply abbreviation for the Primo Early Trend Detector. So what is it? It's a proprietary color bar algorithm. When we say proprietary, we don't disclose the rules. It's not a system. It's not a strategy. It's a color bar algorithm that is designed to show you the short-term trend. That's all it is. But we can trade within that trend because it's really, it's very sensitive, and it really smooths things out for you. So when you see a series of green bars, it's telling you right there that the short-term trend is most likely up. Now, this is an ideal scenario where every bar is green, but most of the time you'll see a splash of red here, but the majority of bars are green. It means the short-term trend is up. Remember, if price is above the 50-period simple moving average, that's the overall trend. But the short-term trend is the one that confirms our signals. Now, if we have the majority of bars red, well, the short-term trend is down. It's that simple. So let's apply these now to these methods I shared with you earlier. Now, we're not just saying that this only works for my strategies and the strategies at Specialist Trading. This will work on anything. So let's share with you those first trading methods, which I said had no consistency to them, and let's see if the PET-D could increase their odds for success. Remember, we talked about using this as a short-term trend identifier. Well, we only want to buy any strategy, any signal, when the bars had turned green. Okay? That's the way you use it. That's in its simplest form. That's the easiest way to use this powerful tool. So you only want to go short, obviously, if the color of the bar turns red. It's that easy. So let's look at Apple again. We had this double bottom. And if we just blindly took the signal, well, it may work, it may not work. But if we add the PET-D, as we see here, the color bars are just black right now. But once we add the color bars, we see here that the majority are green. We have a splash of red every once in a while. But once we hit that double bottom, what was the color of the couple of bars after that? It was green. So this is giving us the go to take the signal to go long. And so it worked. How about TGT? Now, originally we wanted to do the same thing. We have a double bottom here. Now, we just blindly took the signal because our teacher or the book we bought or the course said, well, it's a double bottom. It worked on the Apple situation, so you got to buy this. But if you added the PET-D, we have to see that the bars are green around the second bottom. And if we notice, the bars were red. So this was your confirmation telling you, do not take the trade unless you see a green bar. And it would have kept you out of that trade and you would have lost nothing. So you see the beauty of this particular method. It worked on double bottoms and double tops. How about if we apply it to Fibonacci retracements, all right? In this particular example, we see that we went up, we bounced back to the 50% retracement. When you enter an order, you're just basically hoping that it's going to stop here. We need a little bit more assurance, and the PET-D can give you that. If the PET-D were green, then it gives you the assurance to take the trade. It doesn't mean that it's guaranteed 100%, but it's giving you that confidence that you've increased your odds for success. So we see here, once we add the PET-D, that virtually all of the bars are green. So this is all systems go. It's good to take this trade, and it worked out fine, as you can see. The bars remained green. Now, if we apply it to the other situation in Tiffany, we had a sell-off. We bounced back up. Normally, we would just say, well, let's enter our order and hope and pray that it stops here at this 50% retracement level, okay? The PET-D makes it a lot simpler. It can automatically tell you if the market wants to go lower or higher. We add the PET-D, and if you're going short, you want to see the bars turn red. Well, guess what? Once you got up to the 50% retracement, the bar was green. So the PET-D was telling you, I most likely would not take this trade until you see a red bar occur. And so it would have once again kept you out of trouble. Sometimes the best trades are the trades you never take. So how could we increase our odds for success with strategy number 4? Well, once again, we only want to take strategy number 4 trades where the buy signals are colored green. And as you can see here, if we look back at SNDK, we had that first buy signal that didn't work, but the second one did. So how could the PET D have helped us? Well, we add the PET D, and we see here on this buy signal, the bar was red. So at the end of the day, you would not have purchased because it was a red bar. How about when we go up to the next bar, or next signal, I should say? Well, at the end of the day, the bar was green. So it gave you the green light to go ahead and take the trade. So you would have bypassed this altogether and taken this trade. You see how powerful that tool is. It gives you the confidence to know whether to take the signal or not. Remember, this can be applied not only to the strategy that we're talking about today, strategy 4, it can be any strategy that you currently trade. All right, now if we want to go short, well, same thing applies. We just now look for signal bars that are colored red. If we want to go short, the bars cannot be green, they must be red. So as we see here in an older chart of ROST, we're below the 50, the automatic up and down arrows are generating sell signals across the board. All right, but as you see here, this signal would not have worked. In fact, it kind of went sideways to lower to higher. This signal would have worked. I went straight up after that, and this signal would have worked. It was just kind of going sideways. So how could we have known to stay out of those? Well, we add the PET D, and we see that all those signals were generated with green bars. Remember, to go short, you need a red bar. So the PET D was telling us these are not valid signals. They don't have high probability setups. I probably wouldn't take them. But guess what? The last signal generated was a high probability setup. Why? Because the PET D colored it a red. So this is the one you would have taken, and look what happened. How about FRX? As we see here, we are above the 50-period simple moving average. We have a signal generated, but it's red, so we don't take it. It must be green. About a week later, strategy number 4 generates another buy signal. This time, it's green. Now, someone would say, well, Steve, it must be something to have to do with volume or some really advanced indicator. It's not advanced. It's just a very simple tool that we put together that we want to keep just basically in-house. We don't want a lot of people reverse engineering it or giving it out to people. But as you can see here, nothing really much happened in that week. Prices actually went sideways. But on this particular day, the PET D signaled that it was okay to take the trade. And look what happened. In fact, it went up, and then it went up even more based off some news. Now, it wasn't like they contacted us at Specialist Trading and told us to go long because some news is going to happen. It's going to gap up about 10 or 20 points. We didn't know anything of that. We just followed the market. Remember, the market is the most important thing you should be listening to. Not some trading guru, not some, some guy giving you signals and telling you what to do in a chat room. The only thing you should learn to listen to is the market. The PET D is based off of what the market is telling you, and so is strategy number 4. How about JP Morgan in this older chart? Well, we are above the 50 in these first 3 signals. Now, this signal was colored red, so we won't go long, and it's a good thing we didn't. We kind of went sideways to lower. Now, this signal was colored green, so we would have taken this, and it worked out, along with this signal. Now, even though this wasn't a great signal, we still could have, at the very least, broken even on this particular trade until price crossed below the 50, and now we were generating valid sell signals to go short. How about Amgen? This is an instance where this is for more advanced traders. This is where you see price oscillating above and below. So we wouldn't suggest beginning traders to trade this way. But once you know the strategy and you know how to deal with these type of markets, you can take these automated signals. And this was a sell signal. We closed in the bottom 25%, and we closed below the 50. But we would not have taken it. Why? Because the PET D colored it green. We had to see that colored red. So we bypassed that, and it's a good thing we did. Now, a week later, another signal is generated, but this time to go long. Even though we've been crossing above and below, we still had 2 signals generated, but this is the only one we would have taken, and this one would have worked really nicely. Cost, as you can see, as it was coming down lower and lower, we kept seeing these bars close in the top 25%, and all of the rules were met in strategy number 4 to go long. So if you just had strategy number 4, you would have had 2 losers right here. This is why we say nothing works 100% of the time. Sometimes it will have these small minor losses. But once you have the PET D in addition to strategy 4, it tells you that you will not be in this strategy, and so you wouldn't have taken these trades. And you would have bypassed all this downward move until we're consistently below the 50 period. So now you're looking for short signals. A short signal was generated here about 3 weeks later, and it was colored red, so it's valid to take, and you had a nice 4 points in the next week to the downside. Tiffany, now if we look at another situation at Tiffany, we are above the 50-period simple moving average. We close in the top 25%, and we generate an automatic buy signal. It's colored green, so all systems are go. We went long. And then another signal was generated here. It's colored green, so you would have gone long there as well. Okay? Now, we didn't know that this was going to gap up. No one knew in advance. The company didn't call us up and tell us that some earnings or some announcement was going to come out. We don't even look at news at specialist trading. The market tells you everything you need to know. ZTS, once again, this is for advanced traders. We had a buy signal just above. It would have gone up for one day, but then it would have petered out. So most likely you would have, at the very least, broken even on this trading using our advanced money management. But then you had another signal to go short. It was colored red, so you could take this signal, and it went lower. Now, if we look at a 5-minute chart of the mini Russell, this is going back to Tuesday of this week. We see here that this is an advanced trade. We are below the 50-period simple moving average, but we closed in the top 25% in this 5-minute chart, and we closed above. So advanced traders would take this trade. Here's another trade that met all the rules to go long, but this one didn't work out. In fact, you would have had a nice loss in this one. And then we finally, on this day last Tuesday, had another signal to go short, and you would have had a nice trade. So 2 winners and 1 loser. But what if we added the pet D? Well, if we add the pet D, we want to see the buys colored green, and we want to see the sells colored red. Once we add the pet D, this was valid, and it worked out fine. But we see on this second signal to go long, it was colored red. So we never would have taken this trade, and we never would have lost any money. And we would have waited for this setup to happen, and we would have had another nice trade. So 2 winning trades if you're trading the mini Russell on a 5-minute chart just 2 days ago. Now, if we look at what happened the 24th and the 25th, this was Tuesday and Wednesday, yesterday, on a 5-minute chart of the E-mini. We see here that we had some really nice trades to the downside on the same day, the 24th, on a 5-minute chart. Then we had one trade here that was kind of anemic. It really wouldn't have worked out well. Maybe you got stopped out. Perhaps you had a small minor loss in this, followed by another trade that wouldn't have worked out that well, but 3 more winners. Okay, so once again, this is consistency. You have a total, I believe, of 8 trades here. 6 worked out, 2 didn't. Could the pet D have helped us? Remember, if we're going short, we want to see red. If we're going long, we want to see green. Well, if we go back to Tuesday's action, the close, all these sell signals were red. So you would have taken each and every one of these. The first signal of the day on yesterday in a 5-minute chart was green. So you would not have taken this signal. Now, all of these buy signals were colored green. So you could have taken all these in the first, or I should say, for the remainder of the 25th. The only one that probably wouldn't have worked out is this one. This would have been a bona fide losing trade. And how about the dollar-yen? We look at a daily chart here of the dollar-yen. This is going back to May. Once again, we're oscillating above, below, but the automatic arrows generated a sell signal, okay, to go short. So right here you're saying, wow, how do I know it's not going to bounce back above? This is kind of scary because for the last couple of weeks, we've been bouncing. Every time we go below, we bounce back up. We go back above, we bounce back below. Well, you simply add the pet D. And the pet D is giving you assurance that most likely the odds are in your favor that this is a valid short signal. So you could have shorted the dollar-yen and had a nice trade to the downside. All right, so let's recap here before we go into the question and answer portion. I shared with you 2 conventional methods. Those are double bottoms and double tops, as well as Fibonacci retracements. Now, I know there are a lot of traders that trade this way, but they're very difficult. I would say the majority of traders who trade these methods do not have any consistency in their trading because they're difficult to figure out. They'll work until they stop working. Remember, at specialist trading, we want things that are consistent, things that are more cut and dry. We want to rely on a consistent method that works in our favor as opposed to simply entering an order and hope that it stops right there. Okay? So we share with you the 2 rules that make up the basis for strategy number 4. That's, first of all, adding a 50-period simple moving average. We showed you this concept in a 5-minute chart, on a weekly chart, and on a daily chart. This must be added to each and every chart, and if price is above, you only look for buy setups. If price is below, you only look for selling setups, regardless of what strategy you trade. Then secondly, the second method was, or the second technique was, to look for a bar that closes in the top 25% if you're looking to go long above the 50, or a bar that closes in the bottom 25% if you're looking to go short below the 50. These are two great and powerful but simple techniques that you can add to any strategy you currently trade, or you can see how they made up strategy number 4, one of our most consistent strategies. I just went over numerous examples with you. Now, we said that strategy 4 is great. It has consistency, but sometimes it will go into small little drawdowns and small little losses. So we added the short-term trend identifier, the PET-D, and we increased our odds for success tremendously by adding the PET-D because it filtered out which trades to take and which ones not to take. So it's an extremely powerful tool. So in the last couple of minutes here, I want to invite each and every one of you to take advantage of a great 2-for-1 attendee special we have. We're going to combine these two things we talked about today, strategy number 4 and the Primo Early Trend Detector. I know the graphic there says E-mini strategy number 4, but it works on virtually every market. The same rules will work on, as I just showed you, the Forex markets. It'll work on intraday E-mini trading. It'll also work on daily bars of stocks. So don't be fooled there by the E-mini title. Strategy number 4 will transfer over into any market, any time frame, in any direction. And you'll see the consistency with strategy 4, and then you'll see how the odds increase even more with the PET-D. In fact, let me share with you some recent things that happened with the PET-D. Okay, this was in USA Today. This came out on an announcement on the 13th of June. It says open table shares are up 33 points on PCLN. That is a Priceline Group announcing to buy them out. Okay, so it states that shares of open table traded 47.2% higher on Friday as the Priceline Group announced they have entered into a definitive agreement to acquire open table for $103 per share in an all-cash transaction valued at $2.6 billion. All right, so if we look at the chart, we see here that price had been kind of going sideways to lower to higher in a range for the last month or two in open table. Nothing was happening, and then this is where the announcement came out. So looking at that in hindsight, someone would say, boy, had I only been long open, had I only known that it was in some type of a trend, because looking back, the past month, open was just basically going nowhere. You didn't know if it was going to go lower or higher. You didn't know what was going to happen. Okay, and so even if you were short open table, you would have really lost a lot of money once that announcement came out. Was there any way a tool could have helped us to be on the right side, hopefully to get us to go long using some type of strategy, or at least be long with this tool? Well, we add the PET-D, and we see here, as early as 3 weeks before the announcement came out, the PET-D turned the bars green. They had been red all throughout April and May, but at the end of the last week of May, we see here that we had our first green bar, then we had a series of green bars. Now, there were a number of bars that closed in the top 25% that could have made the rules. You could have purchased any other strategies that we use that apply to this, and you would have been able, if you applied some of our strategies, to actually be long open before the announcement came out. But either way, let's say you had been short open, once the bars were green, you would have covered knowing that you're on the wrong side of the short-term trend. So do you see how powerful this tool is on even news announcement, fundamental news that has nothing to do with it? Well, according to the PET-D, this was already built into the price, and the PET-D tool discerned that this was happening. So this is what can happen on daily bars. But what if we want to go even more longer out and long term? We can look at a 20-year chart of the INX. That's the S&P index chart. We see here all the peaks and valleys, all the swings and lows of this particular chart. Wouldn't it be nice to know when to get in for a long-term basis and when to stay out of the market? Here were these tops. Here was the bubble that happened with the tech crash. And then here was the bubble top that happened with the housing crisis and the bank crisis. Wouldn't it have been nice to know? Well, if we add the PET-D, remember, we want to be long if there's a confluence of green bars. We want to be short if the consistency is with red bars. We simply add it, and you see how the PET-D could have kept you on the right side of the market. Now remember, you'll always see splashes of green or red from here to there, but you want to see the majority of them in one color. Just because you have 1 or 2 does not mean that the trend has changed. You need to see about 3 or 4 in order to change and get out or get in. So we're offering you these 2 extremely valuable strategies as well as short-term trend identifier that you can apply to any strategy, use them together or use them individually. You get instant course access, detailed instruction. We teach you all the entries, exits, and stops. I know a lot of you are going to be saying, Steve, where exactly do I enter with this technique you shared with me today? Or where do I place my stop? Or where do I exit? Well, that comes with the course. If I told you that today, I would just basically be giving everything away for free. It wouldn't be fair to the people that spent thousands of dollars. It comes with the automatic signal alerts, the add-ons for this, so that you can have the buy and sell arrows generated, and you can have the automatic colors generated for the PET-D. Weekly trading video lessons that are archived so you can study them to increase your trading even more, and then access to my personal email. If you purchase these separately, they would cost you roughly anywhere from $3,000 to $4,000. We've dropped the price down to $19.95, but we've increased it, or decreased it, I should say, even more. We've increased the discount. Now we're dropping it down to $14.95. So basically, you're getting one of these for the price of two. Okay, this is a 2-for-1 combo we have, and this is for a limited time only at this extreme discount. Now, we know a lot of you may be having trouble even trying to meet that $14.95, so we do have payment plans. So don't worry. If you would like to come up with a payment plan, our trading consultants can construct something for you so that you can be paying monthly and it can meet your needs. So don't worry if you don't have the actual total $14.95 to come up with that. But this is a great deal, a great discount. We have a lot of people that have emailed me once they purchased the PET-D or Strategy 4 saying how their trading has turned around. They were inconsistent for years, and how they were now able to get on that road to consistency. So both of these are extremely valuable, and if I can share something, in all honesty, I use both of these each and every day. I use them today for my intraday trading. So for more information, here's how to contact us. You can simply talk to any one of the trading consultants at Pro Trader Strategies. These are the people, our sister site, that market and promote all of our individual courses and strategies. You can email them at trading@protraderstrategies.com or call them directly at area code 310-598-6677. Remember, we do have payment plans, so if you can't meet that bulk payment, they can work with you to meet your needs. So it doesn't have to be the same for each person. Whatever works best for you, we can make sure that you have you up and running, okay? Let me just open up the question and answer box, and I want to thank you for all waiting if you have had questions since the beginning. We see here Hemant, who's a great student of ours from India. Hello, Hemant. Hemant Kumar. He says, hello, sir. Strategy 4 and the PET-D are working well for myself. I won't trade without the PET-D. I made profit with every trade. Few may lose, but it is not to lose my courage or confidence. Once again, thank you to teach this wonderful technique. Well, thank you, Kumar. Thank you for the endorsement. Yes, he's one of our best students from India. He trades the Indian markets. So this is something we have no knowledge of. I've never traded the Indian markets. I don't trade them. I never have. And he purchased our Strategy 4 PET-D combo, and he's doing well on markets that we haven't researched or applied to before. So this works in any market in any time frame. Joe is asking, what % of signals are false signals? Joe, in order to answer that, we would have to have a system. In other words, we would have to trade the same signals each and every way. We'd have to use the same exact format. Remember, these are strategies, meaning that 70% are rule-based, but strategies also give you about 30% allotted for discretion. So by discretion, we don't just mean, hoping and praying that it'll work some way for you. We mean that by applying all the tips and techniques that I've accumulated in 37 years, you can use these to either increase your odds by trading conservatively or aggressively. So therefore, that means you can use either a different entry point, you can use a different stop placement, or a different exit point. And there are so many ways to trade them, it's difficult to make this into a system and say, well, we're going to backtest and research and come up with an exact number to show you how many % are profitable and how many are not. All I can tell you is have tremendous consistency, as I'm sure you just heard from Hemant Kumar from India, how well it works on a market we've never even traded before. So it works fine. I use it personally. I think that's the best endorsement I can give, that I use this, and I've been using this for years, okay? But remember, these are not systems. I know a lot of you will want to know, what's the risk-reward ratio of each and every trade? What's the worst-case scenario drawdown? In order to have that, we would have to trade these exactly the same way each and every time. We'd have to trade the same time frame, and then we'd have to go through each and every single time frame, each and every market. Specialist trading is a small company, and we don't have the time or resources and manpower to put that together. Also, we don't believe in systematic trading. We believe in having you become a part of the process, as I went over in the very first minutes of this presentation. Let's see here. Alan is asking, Alan asks, what platform will the PET-D work on? That's a very good question. I'm sorry I didn't go over that. The PET-D works on TradeStation, okay, as well as all of our strategies and methods. TradeStation, Metastock, MT4, and NinjaTrader. So if you have any one of those, you can have the PET-D applied as well as the up and down arrows to any one of our strategies, okay? Can you put the price slides up again? Okay, Rox, I'll put those up real quickly for you. These are the price slides up again. Remember, excuse me, if you purchased these separately before we had this discount, because each week we talk about a different method, a different discount. We haven't talked about this. I believe the last time we gave this discount was in February. So it's not like this is going to last for a long time. But if you purchase these separately when they're not being discounted, the PET-D separately and then the E-mini or strategy number 4 separately, it would probably run you over $4,000 at their base cost. We discounted it down 50% down to $19.95, but then in the next 2 days we're cutting it down to $14.95, okay? So that's really like you're purchasing one of these techniques and you're getting two things altogether. You're getting one, you're basically buying the PET-D and getting the E-mini strategy 4 for free, or buying strategy 4 for free and getting the PET-D, or I should say buying strategy 4 and getting the PET-D for free. So it's a great, great discount. And once again, we're traders first and foremost. We know that sometimes you have better months than others. So we're in no way going to say that the only way you can purchase this is by a lump sum of $14.95. So if you take advantage of this, we can work together with you and put a payment plan together. So there's no set payment plan. We construct it to meet your needs, okay? Steve asks, do you use RSI or MACD? Steve, we don't use the MACD. We use RSI sometimes, but we mainly use it for an exit tool on an entirely different strategy. But we don't use it at all for this particular method, any of these two methods. So no, we can't talk about that. Alan asks, what about a 1 minute chart? Yes, Alan, it'll work on a 1 minute chart. It'll work on a 100 tick chart. You know, it works on anything. But I have to say, the smaller time frames you go, regardless of what method, unless you have a very volatile market, you're going to get whipsawed a lot. Okay, so even though it does work on 1 minute charts, I trade 1 minute charts from time to time when the markets are very volatile. But when they're standard markets, I won't trade them because I don't care what I'm trading. If I'm trading the system, if I'm trading somebody else's technique or one of my own, most likely you'd be stopped out because there's a lot of noise in intraday trading at those small time frames. So it works best in a standard time frame, say 5 minutes or 3 minutes, and you not want to have some nice volatility. But we teach all this in the course. We teach you how to use this in its best possible way. Okay. Let's see, the next question, does the size of the bar that closes in the top 25% matter? That's a good question. Yes, obviously you don't want to see a bar that's, let's say, extremely small. Let's say only a normal size of like half a point, because it's not really giving you that value. So you want to see something that's just an average range roughly, okay? And this changes, so there's no way to give you a definitive answer that yes, it must be a point or 2 points, or it must be so much in a particular currency pair. There's no way to judge that because markets volatility changes. But what we can tell you is that it should be the standard range that you've been trading, okay? So if you have a standard range roughly of stocks or the futures that are roughly, let's say, 2 points, and then you see one bar that is only maybe half a point, well, I wouldn't really judge that bar in the top 25%. It's not worth it, okay? I hope that answers your question. Unlike many other professional traders, you do not support and resistance levels. No, I don't, Seb, because as I stated, we're looking for things that are more cut and dry. And I know there are many traders that teach and that trade support and resistance, but it's been my experience, not only through my trading, but through other traders who I personally know, that have a terrible time trading them because they're too subjective. You know, one trader's support is another trader's resistance. We want things that are more cut and dry. We don't want to guess that this is a support level or guess that this is a resistance level. It's too difficult. We want to look at the same thing and have 100 traders come up with the same answer. Therefore, when you use something like a bar closing in the top 25%, there's no way to dispute that. Everyone's going to come up with the same answer and say, yes, we closed in the top 25%, so that should be part of a buy setup, okay? There's no way for someone to come up and say, no, that should be a meaning that you should be going short. Same way with prices above or below the 50-period simple moving average. If price closes above, there's no way for someone else to say, well, that should be a short. It's cut and dry. That's how you get consistent. When you leave all that kind of guesswork out, you'll get onto that road to consistency. Therefore, we do not promote news because, once again, news is very subjective. One trader can look at news and say, well, that's extremely bullish. Someone else can look at it and say, that's extremely bearish. And how many times have you thought a news report or some economic report comes out and it's great and the market goes straight down, or vice versa? We don't want things that are that subjective. Trading is difficult enough as it is, so we want the odds to be in our favor. And they're not in your favor when you start trading things that are too discretionary. All right? These are things such as Fibonacci retracements. These are things such as support and resistance. These are things such as news. So we don't take any of these things into consideration in specialist trading. Now, the reason why I say this is because firsthand, I used to trade this way. When I was on the floor, I traded using all of these things, plus about 20 different indicators, and I couldn't make a dime. In fact, I thought I was going to get fired my first year of trading because I was not making any money. My mentors told me the same things I'm telling you. Get rid of all these things that conventional wisdom tells you work, because they don't. There's no consistency. They'll work for a few times and then they won't work at all. So get rid of them and only focus on what the market is telling you. All right? If the market is telling you it wants to go higher, then you just jump on board. That's it. That's your only job. Your job is not to guess when the market tops out or when the market bottoms out. Your job is just to jump on board. If the market tells you it wants to go lower, you jump on board and go with it. That's it. It's that simple. But when we start trying to figure out the news, we start trying to figure out support and resistance, that's when we overcomplicate our trading, and that's where the inconsistency comes in. Okay? So I hope that answers your question. Let me go over a few more before we have to sign off here. Andrew just asked, do I have a strategy for trading fundamental announcements? No, I don't, Andrew. Once again, we don't look at anything fundamental in our trading. Phil asked, does it work on range or Renko bars? Yes, it does. In fact, both of these work on range bars. I know this personally because I use them on range bars. Okay, and you can experiment which ones work best for you. So you get some really nice signals. But Renko, it doesn't have that much consistency to it. Now, I haven't been trading the Renko charts long enough and to go back and research to see if it works well. But in my short experience trading Renko bars, it doesn't work as well as it does on range. So I would apply it mainly to range. You get some really, really nice signals with the range bars and strategy 4 and the PET-D included. Emmanuel asks, how much does it cost to buy TradeStation? You know, that's something you would have to contact with them, or I believe some of the trading consultants at Pro Trader Strategies can probably help you with that. I think there may be some free trial that you can get or a discount provided you mention us or whatever, but I would contact our trading consultants at the number I provided or the email I provided. If I change the 25% in the rule to 20, would that improve my result? That comes from John. You know, John, I haven't studied that. The point is, you want to see bars close. You know, you don't want to tighten up your rules so much that it takes you out of a lot of trades. In other words, if something closed in the top 25, but it wasn't in the top 20, it may be a great signal, and you may just have missed it because you tried to refine the tool so much. So it's up to you. You know, it's not that you're going to be doing anything that is negative, but you just may be canceling yourself out of a lot of nice signals. So I don't know. You know, 25% is a good round number that seems to work pretty well. Okay. Stephanie asked, if I only purchase the PET-D, does it include the signal alert? Well, remember, Stephanie, the PET-D does not provide signals because it's only a short-term trend identifier. The signal alert comes with the strategy 4 because strategy 4 is a full-fledged strategy. It's something that you base your buy and sell signals off of. But the PET-D is just a short-term trend identifier that tells you with high frequency what the short-term trend is by coloring the bars. So the PET-D will automatically color bars for you, but it's not going to provide you with an up or down arrow because it's not a system or a strategy. It's simply something getting you in sync with the short-term trend. Now, you can trade off that extremely well, and in the PET-D course, we show you 4 great entry techniques. But remember, it's not a strategy. It's a great high probability tool for being in sync with the trend. Okay? Hope that answers your question. We have time for just about one more. Let me see here. Platform. someone is asking what the Pet D looks like with candles. I would suggest getting a link to the recording of this, and you can see what it is, because I don't want to go back in the slides that far back. Mr. Primo, would the Pet D work on a MetaTrader platform? Yes, I believe it would. I believe it does. Yeah, MT4, it does. Says, does the Pet D or buy-sell arrow signals on charts, does it repaint once a price have moved and voids the signal, it seems? No, that's a good question, Irma. Once a signal is generated and the Pet D is colored, it does not recalculate and repaint, because that would be like optimizing what we just gave you. Once the bar closes, that's it, okay? So if you get a signal and the bar is closed, that signal stays there, all right? It will recalculate while the bar is dynamically updating and it hasn't closed yet. But once the bar closes, that bar will continue to remain green or red, and it will, if it has a signal, it will continue to show there, regardless if it's a valid signal or not, or in other words, if it works or not. But it doesn't recalculate, it doesn't optimize and change again to fit what's happening in the future, okay? So it's just cut and dry. Once again, we're not going to change anything to make it alter and look better, okay? Now let me just, the last slide here, give you that information. And remember, if you're interested in taking your trading to the next level, I highly suggest that you take advantage of this combo deal that we have today. Remember, individually, together, these would cost about $2,000 each. We originally dropped the discount down to $19.95 for both. We're dropping it down for the next 2 days down to $14.95. But trust me, we know that many of you cannot make that one initial payment, so we have payment plans for the next couple of days if you want to take advantage of this discount. This discount is only going to be good for the next couple of days before we move on to another approach and another technique that we have for our members. So contact the trading consultants at ProTrader Strategies by emailing them at trading@protraderstrategies.com, or simply call them directly at 310-598-6677. I really feel these strategies will help take your trading to the next level. I use them. They're great techniques, and they're consistent. That's what we're really trying to promote. We're not going to promise you that they generate $5,000 a month in trading or 5,000%, but we're just going to tell you that they have tremendous consistency to them, and that's what we're trying to promote in all of our students and members. Thank you so much for attending today, and I look forward to all of you becoming members of Specialist Trading. Thanks. We'll see you next time. Bye-bye.